All right, market watcher Scott Martin, Jeff Stott on all of this. Jeff, where is this going?
I think the most important thing that was said overnight was that the Chinese are open for negotiations. I believe cooler heads are going to take over. I don't think we're going into a trade war. I would point out that there has not been a Dow theory sell signal, which was circulating around the Wall Street canyons yesterday, and that we did not violate Monday's intraday lows. So I was actually in there buying stocks this morning.
All right, that's the one that says that transports get hit, and it's a matter of time before the rest of the markets do. You never materialize, so not a problem for you.
Not a problem for me. I mean,
okay.
Earnings growth still looks pretty good to us.
Okay, I understand. Scott, I'm looking at this, though, and wondering how far it goes because, again, to Larry Kudlow's point and Wilbur Ross, who was on CNBC, they've been saying, you know, look, don't worry about this. But then they keep adding items to a list of things we shouldn't worry about. And when people keep telling me, don't worry about it, don't worry about it, I worry about it.
Yeah, I do too. I mean, the talk gets louder, Neil. More sand in the sandbox gets thrown at each other. And I mean, it's like, oh, no big deal. We were just kidding about that last overture we made. I agree, man. I think the direction is not good. And I do appreciate Jeff's onions here by going in and picking off stocks at these lows this morning. Don't forget, sports fans, the S&P 500 was about 60 points. Yes, 60 points lower overnight than it is right now today. So maybe we're holding these lows. We've tested these really key levels, Neil, in the market now 3-4 times in some cases. So that's good. But, you know, it's interesting. I just look at this and I'm like, who's really holding the cards here? You know, you've got China imports of U.S. exports at about over $100 billion, so that's kind of a big deal. But you know what? When we look at their situation as to how much they're bringing in of our stuff, about 8% of their total imports are from the U.S. because they're trading with South Korea, they're trading with Taiwan, they're trading with Japan. So to us, I think this is a lot bigger deal on our side than it is to them. We got to be careful how we talk.
All right. Now, I know that the betting seems to be, Jeff, and to your fine point, you've been very right through a lot of these market swings, that the Chinese will capitulate and maybe buy more semiconductors, computer chips, stuff like that. Maybe, you know, beef up their purchase of U.S. beef and beef-related products, no pun intended there. And whether that's enough to shave $100 billion off our $375 billion trade gap, I don't know. But that something like that will be done. But every day we're hearing of new products, new industries that will be sort of roped into this. It might get to a point of no return. You don't see that.
I do not see that. I think the markets are going also through a growth scare. You've seen some weakness in the manufacturing surveys recently. You've seen some of the credit spreads suggestive of that. But I continue to think the stock market is bottomed here. It bottomed in February. I think earnings are still going to come in better than expected. I think the economy is going to reaccelerate. And I think people are still underinvested in U.S. equities. And I've never seen greed change to fear so fast in 47 years in this business.
All right. So calm down, I think he's saying, Scott.
Yeah, and I agree with part of that. I think greed is never a good emotion, as is fear. I mean, those become really your worst enemies, Neil, when you're an individual investor, certainly when you're trading or repositioning your account. But when the market jumps all over this like it does, or jumps all over the map, it means the market's not comfortable wherever it is. So a big move is going to continue to come until things calm down.
All right, guys, thank you both very, very much.